Hello everyone and welcome to today's morning report with me, Richard Perrimark, Alice. That's Handtech Markets on Wednesday 12th of July. We've got a interesting open actually. We've got sort of a degree of dollar weakness, and that's coming on the back of a couple of factors really. We've got more political pressure on Donald Trump, incredible, that the amount of revelations that continue to come out about him. The sort of suggestion that his son has been was sending or had email communication with Russia in the run-up to the election, because the Russians were claiming that they had some sensitive information that would discredit Hillary Clinton, and that is just again increases the potential for impeachment on Trump, and it's interesting that we've seen yields falling. Well, basically safe haven plays just benefiting on the back of that. Let me just show you the markets board first of all, very briefly. The dollar is slightly under pressure, mainly against the yen though, and the yen is that safe haven play as these yields have just sort of rolled over, haven't they? The 10-year, but look at the 2-year as well. And the 2-year falling away also in the wake of comments from Fed members overnight. Lael Brainard, who's a Fed governor on the board of governors, and also Patrick Harker, who both basically have been questioning inflation and the impact that that could have on rate hikes going forward, and the fact that obviously if inflation doesn't pick up, then that could question whether the Fed could push ahead so strongly with its hiking cycle. So yields have been hit, certainly on the short end, with the 2-year falling away, the 10-year yield also falling away as well, as sort of safe haven plays have benefited overnight. But interesting that we've also seen a rebound across equity markets today in the Europeans. European ranges continue really, the near-term ranges over the past couple of weeks. No real sort of breakout, certainly on the FTSE, rolling over. Again, the resistance at 737 or around 7380 remains intact. DAX again sort of up towards its resistance. Can it break out? 7490 is resistance on the DAX. So these markets are testing their resistance levels, but again, it seems to be stalling slightly today. It'll be interesting if that breakout can be seen. But what we did see yesterday was the S&P 500 mildly lower, but still sort of arguably tracking lower on that downtrend. So yeah, nothing really doing on that regard. The dollar, as I said, under pressure yesterday, little bit of a rebound today on the back of euro weakness. But yeah, interesting that the dollar remains under pressure. So that sort of rounds us to Yellen's congressional testimony, which is the big factor today. That's at 3 o'clock this afternoon. Yellen testifies a couple of times a year towards to Congress. She gets a day with the House of Representatives, and then tomorrow she gets the Senate. Today is the House Financial Services Committee. And she will be answering a load of questions, presumably about monetary policy, the Fed balance sheet, and interest rate hikes. So markets will be very much interested in what she's got to say. This afternoon we've also got the Bank of Canada. Interestingly, Bank of Canada. Monetary policy for the Bank of Canada has been an interesting one of late, because you've got increasingly hawkish comments from Bank of Canada members. Governor Pollock's sort of adding to that in recent rhetoric, sort of setting the market up potentially for a rate hike today. Now, the market is not on consensus expecting a rate hike, although it actually is looking at this. Sorry, I've just noticed that Reuters have upgraded their expectation to a rate hike for the Bank of Canada today. So it's interesting. Will we get one? According to Reuters, we are now set to get a rate hike. So the balance of that expectation seems to have shifted slightly in the last sort of day or so. Now that would obviously help to strengthen the loonie, if that were to be the case. This afternoon we've also got the EIA oil inventories. Now yesterday we had the API oil inventories that with a bigger than expected drawdown, which helped to support the oil price. And expected at 3 million barrels of drawdown on the crude stocks today, but also watch out for distillates and gasoline as well. So you do get a lot of volatility off that EIA data, but the main focus will certainly be on Yellen this afternoon. So that takes me to my chart of the day, which is the Kiwi. Now the Kiwi has been sort of tracking sideways really since breaking that uptrend, but sort of has formed a small top pattern on the break yesterday. Sharp break down below 72.40. Now that completed a small top that sort of implies what, 73, around about 100 or so ticks of downside, which will certainly bring you back into the realms of this support band, 71.70 to 71.95. These lows here from mid-June, and it certainly looks as though the market is sort of increasingly corrective on the momentum indicators as well. The RSI tracking lower, back to 50, MACD lines accelerating lower, stochastics also accelerating lower, having had a bear kiss. So this is increasingly corrective on this market. Today we've had a rebound, but it seems as though it's a rebound into resistance. You look at the hourly chart, you can see this overhead supply all from this 72.40 neckline coming in as a basis of resistance. 72.40 to 72.60 seems to be sort of the neckline area on the hourly chart, and that would give you a nice little selling opportunity. You look at the hourly RSI failing consistently around the 60 mark. Hourly MACD lines sort of rolling over around neutral. Stochastics already falling back. So this is a market that certainly looks as though it's a sell into strength, increasingly on a near-term basis, and that would suggest a retest of yesterday's low, 72 figure at some stage, and further downside to test certainly these support areas, and 100 ticks from 72.40 is 71.40 as your implied near-term target. So I wish you good luck in your trading today, and I will speak to you later. Thank you.